What if you woke up tomorrow and the world's biggest silver exchange had gone completely silent? No prices, no trades, no explanation. For 72 hours straight, COMEX went dark, and while Western markets froze, something shocking happened in Asia. Buyers didn't panic, they bid higher, much higher. Reports started circulating of silver changing hands near $195 an ounce. No headlines appeared, and no emergency press conferences were held. There were no official explanations, just silence. And silence in financial markets is never accidental. Stay with me, because what you're about to hear explains why shorts may be trapped. It explains why physical silver suddenly matters again. And it explains why this blackout could be remembered as the moment the paper market finally cracked. Before we go deeper, take 2 seconds to like this video and subscribe to Market Truth Archives. It tells the algorithm this kind of real market analysis matters. It also helps this channel keep bringing you stories Wall Street would rather you ignore. Your support keeps this research alive. Now let's slow this down and really understand what just happened. COMEX is supposed to be the heartbeat of the global silver market. Futures prices discovered their ripple across ETFs, mining stocks, options, and even coin shops on Main Street. When that heartbeat stops, the impact is immediate. So when COMEX doesn't just glitch for a few minutes, but effectively goes dark for 3 full days, that's not a technical hiccup. That is a system stress signal. In those 72 hours, the paper price became meaningless. And the moment paper loses its voice, physical markets start speaking very loudly. This is where Asia enters the picture. While Western traders were refreshing screens and waiting for guidance, buyers in Shanghai, Singapore, and parts of the Middle East acted differently. They asked a simple question: can you deliver? Not what's the spot price, not what's the futures curve. They only cared whether the metal actually existed. When supply is tight and delivery is king, price becomes a negotiation, not a quote. That is how whispers of silver bids near 195 began circulating. These were not screen prices, but private physical transactions. They happened across desks and through direct contacts. They occurred in off-exchange deals, and none of them required COMEX to function. That alone should make you pause. This is where the idea of trapped shorts comes in. For years, silver has been dominated by paper contracts. Enormous short positions were rolled again and again. The assumption was that price could always be managed lower or capped. As long as contracts could be settled in cash, the game worked. But when a blackout hits and confidence wobbles, the risk profile changes instantly. Shorts do not fear price moves as much as they fear delivery demands, because delivery exposes the math. If even a small percentage of paper holders suddenly demand metal instead of cash, the system breaks. There simply is not enough physical silver to meet those promises. That imbalance has always existed. The blackout merely revealed it. Think about the psychology during those 72 hours. If you are short silver and the main pricing mechanism goes silent, you are blind. You do not know the real clearing price. You do not know who may demand delivery next. You also do not know whether reopening will come with emergency rule changes. Meanwhile, physical buyers remain calm. They already assume paper prices are unreliable. To them, silence confirms their thesis. This is why the Asia bid matters so much. It is not about whether 195 is the true price today. It is about the signal behind it. When paper disappears, silver is valued very differently. In Asia, silver is not just a trading instrument. It is strategic. It is money, industrial input, and insurance at the same time. Demand from solar panels, electronics, energy systems, and medical technology continues to rise. Supply does not rise at the same pace. Mines are not ramping fast enough. Recycling cannot close the gap, and governments are not transparent about strategic stockpiles. Now imagine COMEX comes back online after 72 hours. Prices resume. Charts begin moving again. On the surface, everything appears normal. But underneath, something fundamental has changed. Trust has been damaged. Once participants see that the system can simply go dark, they never see it the same way again. Confidence does not reset instantly. That is when hedgers quietly reduce exposure. That is when large players source metal outside exchanges. That is when liquidity thins, making future moves sharper and more violent. Fragility increases. If you are still following, this is the part most people miss. Markets do not break all at once. They fracture quietly, first through exceptions, then through side deals, then through silence. A 72-hour blackout is not about those 3 days. It is about what happens after. Shorts grow cautious. Physical premiums rise. Arbitrage stops working. The paper price becomes just one opinion among many. It is no longer the final word. That is a structural shift, and those shifts tend to accelerate. This is why we cover these stories on Market Truth Archives. Not to hype numbers, not to chase fear, but to decode signals before they become obvious. And the signal here is loud. When Asia bids triple-digit prices for physical silver while Western screens show nothing, that is a warning shot. It tells you the global silver market is no longer unified. It is splitting into two worlds. One is paper. The other is physical. And those two worlds do not obey the same rules. As we move forward, watch what happens next. Watch delivery rules. Watch margin requirements. Watch how often technical issues appear during volatility. Those are not coincidences. They are pressure valves. And every time one opens, confidence leaks out of the system. That leakage compounds. Near the end of this video, consider one simple question. If COMEX can go dark for 72 hours once, what prevents it from happening again? Especially during a larger move. Do you believe silver's real price is closer to the screen or closer to the physical bids coming out of Asia? Share your thoughts in the comments. If this breakdown added value, share it with someone who still thinks silver is just another commodity. And make sure you are subscribed to Market Truth Archives. Because the next chapter of this story will not be announced on the evening news. It will unfold quietly. It will happen in side deals. It'll happen in delivery demands. And it will happen in the gaps between the headlines.